to our big story on the show this evening. It is indeed time for some profit booking in the last street. The Sensex tumbled more than 250 points in trade today on weak global cues, led by the big fall in the Nikkei. Investors prefer to play safe ahead of the crucial industrial production data that will be released tomorrow. The sentiment remained muted with global uncertainties, including the Fed move on interest rate hike. Brexit and fears about the Japanese slowdown did weigh heavy on investor sentiment.
The sell-off was secular, with key sectors like IT, FMCG, capital goods and auto coming under the hammer. Infosys came in for some heavy selling, shedding more than 4% in trade after the company said it expects some short-term quarterly bumps in sales growth. Experts say the correction was on expected lines after a prolonged rally. So what's in store for investors in the coming days? The big sell-off on D Street and the way ahead? That's our top story on India Tonight.
Now, sell-off in rest of Asia as well as Europe dampened mood on the last street. And for more details, we'll of course take it across to Kimberly Lim, who's joining us all the way from the Reuters newsroom in London, and Tanveer Gill, who's joining us right here in our Mumbai newsroom. Thanks very much, Tanveer, for being with us, and Kimberly, to you too. Profit-taking did intensify on the last street, Tanveer. A fair assessment there?
Yes, there was profit-taking in the session today, and that was expected because we'd seen a decent run from 8,000 to 8,200 for the market. So, a bit of a step back and consolidation would be expected at the 8,200 level, and that's exactly how it happened, in line with what the rest of the globe was doing in trade. Of course, in the internals, you also see call writing build up around the 8,300 mark, which is suggesting near-term resistance and a pause in the rally over the course of the next few sessions. Whether this extends out on the flip side, whether this is a reversal in the uptrend remains to be seen, and a lot will depend on global cues on that front, and of course big event risks in the Fed meet as well as the Brexit vote come the next 2 weeks. But one would not expect too much enthusiasm and excitement in the markets, given the way we've closed today. On to the internals on the index itself, you had Infosys, which dragged down the market, so 4% plus cut coming in for that stock, followed by a sell-off in TCS. ITC, HUL were weaker in the session. HDFC also saw some unwinding pressure. Of course, Infosys has raised concern and caution for the entire sector, with the management saying that there are speed bumps ahead in terms of the demand environment, even though they're maintaining their FY17 guidance. On the flip side, oil seems to be on the boil, and that commodity surpassing the $50 to a barrel mark is renewing interest in oil and gas names. So ONGC, Reliance Industries, BPCL were active in the session. Extended out to the broader markets, you had Kesoram Industries, which rallied because CARE put it off its credit watch list. And then you had aviation stocks also rally towards the 9 minutes of trade, with the government telling PTI that they will not interfere with fixing airfares or capping them for that matter. On the flip side, NBFCs were in for some profit taking. Muthoot Finance particularly lost about 7% because they've seen such a decent run. And PSUs, so Hindustan Copper, Concor, you had Dredging Corp, all of these were active names. Broadly, the market was really about large caps, and there it remains to be seen whether this sell-off or this unwinding pressure extends out to sentiment turning negative. That is still inconclusive.
And let's get you some big market voices before we do a global check on equities. Marketmen believe that now that commodities have bounced back from the lows, indices will move upward fairly quickly. Listen in.
Market has still potential to continue its upward movement. I'm not talking about only India, even US market we like a lot. Okay, it's close to 52 weeks high, and people are still bearish. Because of this negative news or degrowth story which we are talking about, people are extremely bearish. People are holding a huge short position. Look at the classic example of crude. Okay, right from 2015, crude started drifting down, and closer to January, when we made a bottom call at $26 on 27 January, though people were talking about $10, $15, $12. People are not fundamentally not bullish, but most of the commodity stock has given you 100% to 200% return in what? Last 5 months, 6 months?
Growth in India will accelerate, which, it will be the case. I mean, I think the economy will move up another gear if the monsoons are fine, but, we don't know that yet. So the market's pricing in a few things. One, obviously, the back end of the earnings season was particularly positive and surprisingly good. The RBI in their policy said that they're seeing a pickup in industrial activity, and that capacity utilizations heading higher. Global factors will probably have a little bit more to say in the next few weeks with obviously the Brexit vote as well. We like the two-wheelers, we like the private banks. We're kind of continuing to avoid any PSU banks.
All right, let's shift focus and talk about the global equity action, where markets are finding themselves on shaky ground. For the first time in 5 days, you are seeing pressure creep in as far as equity action is concerned. The rally has grinded to a halt, with stocks on Wall Street seeing profit booking too. Oil prices have pulled back sharply in the past 2 days. On your screens right now, the Dow Jones at 17,937 is down about 0.4 of a percentage point. And let's turn focus to the Nasdaq, which was also trading in the red when I had last checked. There you have it on your screens. Again, 0.4 of a percentage point down at 49.56. Stocks in Europe did fall into negative territory as sentiment was hit by a pullback in oil prices and concerns over the global economy's financial health. We'll take it across to Kimberly Lim, who is joining us with details of all the trading action all across Europe.
Well, yes, all in all, another session down in the dumps. Stocks falling for a second straight day. A couple of factors really driving the market today. We've got weaker commodity prices weighing down related shares. Oil and gas companies really taking the brunt of it, with basic resource shares also hit. Elsewhere, financials were also under pressure. The Stoxx 600 index lost nearly 1% at one stage during the session. A couple of things hitting appetite for the sector. Expectations, analysts say, that the US Fed will hold fire on a rate rise anytime soon, hurting the big European giants with global business, as are the ECB's ultra-low interest rates. Now, Centra, a supplier of plastic and packaging components, was the biggest faller on the Stoxx 600 today after warning of lower full-year profits.
Thanks for that, Kim and Tanveer. That's the check on equity market action. For the spotlight on commodities, crude then, where oil prices edged lower as traders took profits after 3 sessions of gains, but prices remained close to the highest this year thanks to a fall in US crude inventories and supply disruptions as well. On your screen there, crude at 56.10, that's a cut of about 1%. Brent at 52.03, that's down again 1% in trade.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.